Hey, David, how you doing?
All right.
So I have a couple of questions. I want to know if you can explain when he posts for an option and he says it's this call, this number call, and I don't understand how to read that. He might say this is a 540 call for April. Is a 540, like, does that mean that's how much the one contract is, or you got to times that times 10? Can you help me understand that? And then my second question is, yesterday on Trapping Tuesday, somebody asked him like what would be a good place or what would be good stocks. And he said go to recession recession
Portfolio.
portfolio. And so where do we find that?
All right. The first one. So you haven't ran an option yet.
Nope.
Do you have the course?
Yeah.
Okay. So the first number is the strike price. So when you hear people in the chat talking about, man, that 505, I ran a play for the 505, all they're doing is calling out the strike price. Now, if you want more detail, people might say, well, what's your expiration? How much did you pay for the contracts? What was your premium? That's further conversation into it. But when you just hear people rattling off that first number, it's always the strike price. Now, the strike price is what you're trying to get to.
Okay.
So are you looking at one right now?
No, I'm not.
Okay, so when you called out that first number, when you just gave me the example, that's saying the strike price. Then you have the expiration date.
Okay.
That's when you want to exercise or cash in the play before the expiration date hits. And if you are looking at the plays that Trap drop in the chat, he will also give you the premium price that he paid.
Okay.
Now, as far as the recession portfolio, we can get that on Trapping Tuesday, every Tuesday. However, it's on YouTube. So all you got to do is just type in Trapping Tuesday on YouTube and pull up the latest episode of Trapping Tuesday, and you can look at the recession portfolio that way. You can put it on pause and take your time and look at all the ticker symbols and what he has at that time. If you're in the Patreon, Masters of the Triple Beam and Triple Beam team, looks like you are. That's why you're in this call now. You can go to the chat, the main page chat, and get those plays in real time. And I'll show you that here also on my slides.
Okay. Okay. Thanks, Fabian.
Did all that make sense?
Yes.
Who got Braylon?
Yes, sir. What's up, Davian?
What's going on?
It's going good. I joined about 2 days ago. So, when I got in, I just saw the money printers chat, and I'm a part of just the Triple Beam team, and I was looking for, because one of the features of Triple Beam team is live option plays. So, when I got into Patreon, I was like, okay, where do I find those at? Is it just in the chat? Do I have to scroll up past all the conversation? Or does he just call them out in the money printers chat as he makes the plays?
All right, so I got this on the screen here. Can you see that?
Yeah.
Okay. This is just basically a screenshot of my phone. So you already know what membership tier you're in, right?
Yeah.
Okay. As far as the chat, I like to make sure everybody got their notifications on, because when Trap posts the plays, you want to be ready. So make sure your notifications on. Trap's post. Now on your phone, you're going to have the home, post, and chats. Do you ever see that on your phone?
I do. Yep.
Okay. The option plays are up on the post. Everybody likes to go to the chat. That's where everybody's hanging out at.
Yeah.
Trap does business in the post section.
Okay.
Because the chat thing is kind of new. It wasn't here when I first got here.
Gotcha.
So all the business is done in the post. So that's why I say turn your notifications on, because when Trap posts, he posts the plays in there.
Gotcha.
As you can see that example I got, he have it labeled option play, or sometimes he's just posting information to calm our nerves if the market is looking bad. That's where you're gonna go find your posting.
All right, I gotcha. Okay, cool.
Yeah. Now that's real time. Even if you want to go back and look at some of the old plays, because even when I first joined, once I got hip to this, I went back and searched about 6 months and pulled up the old plays that I was not a part of prior to joining, but some of them plays were still good. But I wrote them down, so you can always go search.
Okay.
So you click over there in the little right hand corner, and then basically all you got to do is just you can pretty much type anything, man. The search is pretty strong. So if you want to type in option play, you want to type in lottery pick, if there's a certain company that you think Trap said something about, you can type it in there and it'll pull up that company if he spoke about it in any of those chats, in any of those posts.
Okay. Sounds good. Okay, yeah. Thank you, Tavian.
All right. And the young lady, I forgot her name, that I was on the phone with just a minute ago, this is what she's referring to here. I got it highlighted in yellow. That's the name of the company when Trap drops an option play. This is pretty much all he's doing. Not too much information behind it. He just letting you know he's dropping the play. He's going to give you the expiration date, the strike price. In this case, that strike price was a 520 play. The price he paid for it was $28.58. That kind of gives us an idea what Trap paid when he got in at the time. So if you came to the party late, you can kind of get an idea. It might be $30 when you look at it, if you still want to get in it or not. So you post the price that he paid, the strike price, and the expiration, and the name of the company. That's pretty much how the plays are dropped.
Gotcha.
Anything else?
That's all from me. Thank you.
Gotcha. All right. Great.
Hello. When you were talking about the search, it seems like when I use the search, it kind of searches every other person who has a Patreon thing. So that's confusing to me. And also, if I do a post or reply to something,
Well, that's
I have a
because you're
hard
using
time.
this one down here. See, there's a search down here. You can't use that.
Okay.
It got to be that one up here in this corner. See right there?
And you get to that one when you click on home, or you got to click on post. You on
Yeah,
post, and
yeah,
then
yeah. You're gonna click on Trap's icon here,
okay,
and then this will pop up here.
okay,
But yeah, if you
and
try to use that search down there in the corner, yeah, it'll do what you just said.
okay, but anytime I like if it's a reply or I send a message to someone and I'm looking for an answer, that's going to be the best way to go back and get to that message or communication is to go to that search that you showed me at the top right.
Yeah. There's also if somebody responded to you or you responded to somebody, that's a part of the notification. So I didn't
Mm-hmm.
copy and paste that, but there's a whole
Yeah.
notification section where you go back and forth and see who did what as far as any
Yeah.
post that you was involved in.
Thank you.
All right. Then my Sean?
Yes, sir. Yes, sir.
Let's go.
I have a question. I put in the message too. Two of them, which should be quick. Are we watching current price or are we watching a contract bid slash ask price where we tracking every single day? That's been confusing. And then the second question, what do you mean when you say strike price? We trying to get to. That's what we trying to get to when we actually make our play.
All right. So when you ask them question, man, first thing I'm gonna ask you, man, have you bought the course?
Yes.
Okay. The strike price is the price that we selecting, and I don't want to say gambling, but we are under the impression that the stock will get to that price by a certain time, and then that's where you choose the expiration date. So, do you have a platform like a brokerage
Yes.
account? Okay.
Together.
All right. So you're gonna find all this stuff on your brokerage account.
Got you. I done
But
made a plays, so I know what you're talking about. It just I got confused when you said we got to get to, because sometimes we be out the money and we be in the money. So when we in the money, if I make a play and it's at 700, but it's at 659, that's in the money or out the money.
I mean that's another strategy there. You know, to each his own. When it comes to me, I figure I will only play in the money if I'm gonna play earnings. That's a whole nother level of the game, and the only reason I'm going in the money during earnings, just in case the earnings go backwards, and I'm not that far from the strike price. So, because I'm already in it. But out the money, trying to play earnings, playing with fire.
Got you. Okay.
Any OGs got something to add to that? I typically go out the money.
Got you. And then when you track every day, are you looking at? We're not looking at the current price. You're looking at the bid/ask price of that contract, right?
When I'm tracking?
Yeah, every day when we tracking to see if we about to make a play, we're looking at the bid/ask price or the current price going up and down to get in position.
So you referring to before you actually bought the contracts?
Yes. Every day you basically say that we should track every day, follow our stocks every day. Are we looking at the current or are we looking at the contract when we?
Well, if you've done your research, you always monitoring the stock price, because that's all you really see during the day. So I'm monitoring the stock price. If the stock price is 150 and I'm waiting on it to pull back to like 145, I might look to see what the premium price is at 150, and that kind of gives me an idea of what type of premium price I'll be playing with if it pulls back to 145 where I want to enter. Okay. But this is just data and numbers you got to, have down and be ready to execute. That's why a lot of us do research and stuff like that on Sunday, so we kind of know our numbers and price points, because, during the week, everything is hectic, everything is moving fast sometimes.
Sunday is a good day.
Yep, for sure.
Yeah. So you want to create a list, right? Especially a list. I like to look at the companies that's in my industry. And JT put in a good thing in there, right? So we're looking for a pullback in the stock price to see if that option is something that we want to get into. The bid ask is going to be moving just like the stock price move all day. Certain people are trying to bid less for it. Certain people are trying to push the price up. So as the stock price is going up, that ask price is going to go up, right? If the stock price is coming down, that bid, the ask price, the bid, somebody's going to be like, nope, I'm not giving you 200 for it. I'll give you 180. And if the price keep coming down, next person who bid on it, nope, I'm not giving you 180. I'll buy it for 170. Right? So you don't have to follow it every day, but if you got 5-10 companies that you always watch, that you already got saved in your phone, a quick glance at it let you know if it's on sale or not. If it's a green day like today, ain't nothing to buy. You wait for the key is, can you execute on them red days? And that's a mental hurdle that we all gotta figure out. Okay, I'm able to execute on the red day. versus trying to chase something on a green day. You chase on a green day, you're throwing money into the wind.
Gotcha.
Almost.
Thank you.
How do you know if it's a green day or a red day?
Look at the just look at the market, right? So on my phone, and I'm using either bar chart or Yahoo Finance, and let's say Trap put out 5-10 different stocks over the last few months, and I look at it, I save it to my favorites. Just a quick glance at my phone is going to tell me if those prices are going up, right? It's going to be in the green, give me either the percentage that it's up, the dollar value that it's up, or if it's negative, it's going to be red, based on yesterday's price, and either the percentage down or the dollar amount down. So today, I think a lot of people, like my Google Play, ran off the chain the last 2 days. And I was happy. But on the flip side of that, my SMCI play is negative. But I don't have to go, log in everywhere to go look at it. I could just look at the stock price real quick on any platform, Yahoo Finance, bar chart, MSNBC. It doesn't matter. They're just tracking the market as it goes, if that makes sense.
Thank you.
Mm-hmm.
Was that Miko?
Yep.
Basically what he's saying, we got our phone, our tablets, or something in front of us, constantly monitoring. I know I got a desk job, so my phone right there. I got Yahoo Finance pulled up on the computer, and you just pretty much watching things go up and down. You're listening for news on your play, if you are in one. Like today, AVGO, just like around noon time, just burst out of nowhere. And, people had been red for quite a minute. So when you got that news and you monitoring it and it just doesn't shoot up, you've been red for a month, now it finally turned green, you probably want to go ahead and get out of there before the market closes again. So yeah, we always kind of monitor them that way. Unless you got time on it, but we coming down to the end of the year now, so everybody trying to squeeze some little last minute profits in for tax harvesting and everything like that.
Okay, thank you.
Was that Jaheem?
Yeah, Jakeem.
Jakeem, all right.
Yeah, Jakeem. So my question is, when it about the 45 days before the contract ends, counting the days back from your expiration date, I wanted to know, you don't count Fridays and Saturdays, right? So if you're counting back from that Friday, it's Friday to Monday, Friday to Monday, Friday to Monday, and you count that 45 days until you get to the 45 days before the expiration date? Like, in other words, do you include counting the weekends in that 45 day?
If I'm not mistaken, I think it's counting every day. Now I got a couple of contracts getting close to the end right now. I could probably do the math and see, because I got one or two.
It doesn't count the weekends.
It doesn't? Okay.
No, it doesn't.
Oh, okay. Because I remember Trap said that, but I just wanted to make sure because, like I said, one of the expiration dates is June 20th. So when I counted the days back, I was including Saturday and Sunday. So I just wanted to make sure. Do you include those weekends, or you just count straight from Monday through Friday until you get to the 45 day?
Hey, keep in mind now that's just a strategy. It's not law.
Okay.
If your play is doing what it's supposed to do, you shouldn't really even get that close.
Okay.
Yeah, that's the way I look at it, because Trap tell everybody 100%. Some plays are not 100%. So I mean, we buying 6 months. If I can get 100% in 2 months, I'm gonna go ahead and get out. Yeah,
it and get out.
yeah.
Okay.
I ain't gonna sit there and wait on the expiration.
So
You're flipping money fast.
two-part question. Sorry. Um, so in other words, don't get too greedy. So say for instance, if you are gauging, um, let me see, 125 or 150, and you get to that point, you're comfortable, lucky number, whatever the case is, get it, get out.
Yeah. Now, here's the thing with that too. I know everybody sees some of these portfolios and they up 200%, 300%. So you trying to get there, but keep in mind they bought multiple contracts, so they sold their first half at 100%. So when you see most of this stuff at 200, 300%, that's their house money running. So you
Oh,
got to you got to you got to get the multiple contract game down first. And me, when I started, hey, it's one contract all day. So I was, doing my one contracts, building up the money, cash it out. One contract, cash it out. One contract, cash it out. And
okay.
I always saw the power in people's with buying multiple contracts, and those are the ones that's up 500, 600%. I got a Palantir for my daughter. That thing up 1,000 and some percent, but it's house money.
Got
I
it.
already took the initial out.
Yeah, because I was,
You don't want to sit there and hold one contract for 1,000. You would like to, but anything can go wrong. So.
And then the other thing too is it really depends on your entry. So like we can, 10 people can be in the same play, but where they entered can be totally different. So everyone's percentage on that same play with the same strike price and everything, the percentage will be very different based on your entry. So that's the other thing you have to also be mindful of. And then also too, yeah, staying in place too long will cost you more than than what you actually make. So you definitely need to set your range and stick to it, because the market reverses midday. It just wild swings in the market happen a lot more than you think. And so it's better to just lock in the profit and be done.
Live to trap another day.
Live and trap another day. I like that. Okay. Does anyone else have another question? I don't know the rules. So in other words, just like when Jamila is
Yeah,
on.
go ahead, man.
Oh, okay.
Go ahead.
Okay. Dang, I lost my train of thought. Give me a second. Question was. Okay, so if you have two contracts, you take profit in one, and then you let the other one run, and that's better. That's better that way, so that you don't lose everything. Is that what you're saying?
Correct. And
Okay.
and in that instance, when you was asking me about 45 days to expiration, that's where you want to exercise that at. Hold it as long as it's running. Now, if it stops running way before expiration and it starts going backwards, you probably want to go ahead and cut it. Don't give too much of your house money back.
Oh, okay.
That's where monitoring the market comes in at.
Right. So, another thing is that, say for instance, the rollback, right? I think that's what's called rollback. When you go into the same contract, but you go into another price point.
Yeah, roll to play.
Roll the play. Thank you. That happened this week with one of my plays. I got in at the price that I felt that I wanted to get into. It was 825. I got in at 680. Today it dropped down to 558, and I said to myself, "Bag, I should have waited, or should I just roll back and do it now?" Is that a
Well,
smart play? Yeah, go ahead.
so it's going to take time, right? You're going to make mistakes and you're always going to be second guess. Oh, I should have sold tomorrow. If I'd have waited 2 more days, that Amazon would have took off. Or if I'd have waited
Mhm.
another day, I could have got it at a deeper discount. So
Mhm.
if you're following Trap's methodology, where we buy in, 6, 8 months out, it may pull back a little bit lower than what you already got. But you want to know the companies that you are betting on, right? Did something happen in the market to make that price drop? Or is it in a decline phase, right? Is the prices keep dropping anyway? What kind of trend? If the stock is in a downtrend, we probably shouldn't be in it, right? If it's in a steady uptrend and you get a little pullback, you don't always have to average down, especially if you got time, right? You don't want to keep dumping money in any one play, because if that play don't turn out, then you're gonna be mad,
Got it.
right? So it's still up to the individual investor to know what company you're in. You know how that stock price moves, right? Some prices go up, they go down, then they shoot back up, and then you can buy the dip if you want to average down to get a second contract or another leg. But that's going to take time. Being in this game, understanding the sector or the industry that you like, and understanding how those stocks move. That
Okay.
determines if I'm going to buy another leg into it. I'm like, man, forget it. I got time. It went down. What's my threshold as far as I lost 30, 40%? Okay, I
Mhm.
still got 6 months. I'm gonna just let that one ride, and I'm gonna take, instead of averaging down in this play, oh, I just seen a discount on the other play. Let me put that money there.
Got it.
Right. But
Okay.
it's gonna take time, and you're gonna constantly second guess. I would have, could have, should have. If I
Right.
would
Don't
have, it's gonna take
don't
time.
try don't try to time the market. Just, go with the with what Trap says and take it from there. Okay.
You
Uh
and you know when you
mhm.
got it is when you stop waiting on Trap to put in a play, and
Mm,
you go see your own plays. And you be like,
got it.
damn, right? Because I work for Comcast, and we deal with routers and switches, and that's what Arista is. It's they make routers and switches, and Cisco does the same thing. But we've been getting rid of Cisco switches for years, buying Arista, which is ANET. I should have been in that when it was at $150 a
Mhm.
long time ago, because I seen the trend in the market. But that was in my wheelhouse. Then $100 later, here come Trep with the ANET play. I'm like, man, I should have been there. I could have been in this thing 3, 4 times over. But that was something that was in my wheelhouse. I understood it, and I should have been taking action on something that I knew about. But study whatever line of work that you're in, your competitors, who they buy from. It's amazing. There's deals every day. And Trap can't
Okay.
watch them all. He's not going. He's not going to come into communications and tell me which the best ones. That's my
Mm,
wheelhouse, right? You may be in healthcare. You know
mhm.
what healthcare companies are making, what devices, making what medicines. You know what the doctors like. Study your industry, and you'll find your own plays better than anybody.
Because I'm in the transportation, like transit field,
Mhm.
transport engineer. So you're saying to look into that sector and
You
see.
you
Mhm.
will be the subject matter expert in this group when it comes to transportation industry.
Okay.
Now, you may not get the Tesla play. It may not have big boomers like a Tesla move up, but somewhere in
Mhm.
that industry that y'all deal with, competitor or a vendor, somebody is making moves. And all you got to do is go through your company, figure out who y'all deal with. So right now, I go through all the software companies we deal with. Oh, in
Mhm.
order for me to put in my vacation time, I gotta go in Chronos. Is that a public company? Nope. Oh, I gotta
I
go
get
in work. I gotta go in Workday to get there. Oh, Workday is public. Oh, they
it.
got earnings coming out. Let me put that on my watch list. Oh, who else we deal with? Oh, we deal with Commvault. That's who does our backup and storage. Oh, that stock is up 120% this year, and nobody talked about it.
Got it. That's a gem right there. Thank you for that. I'm seeing the screen right now with stock chart, and Trap talked about Guru and the other cheat codes and stuff like that. Now, I realize that they're asking me to pay now, like a free trial, but then later on you got to pay for it.
Are you referring to Guru?
Yeah.
Was it Guru? I think it's Guru or
Guru Focus.
right.
Guru Focus.
So
So I
on
learned from the
Guru
people in the
Focus,
chat. They said use the incognito page,
incognito. Yep.
Incognito. Hold on.
I do it
and
Incognito.
then
all
you
the
go
time.
right back in there and put in some more stocks.
Incognito. Okay.
And yeah, I learned that from either Thavian or somebody else in this chat.
So you're saying look for your stocks and stuff in that in
Right
that
there,
company.
incognito browser.
Oh, oh, I'm thinking that you're talking about something.com. Okay. My bad. So look for it in there, and then what? They
No,
won't charge you?
just pull this up and go through Guru Focus that way. Now it's still gonna allow you to do the 7 free trades, and then it's gonna ask you to do membership. Then you just exit out of this browser and pull it up again and do it all over again. You'll get that same new 7 again.
Now that's a game right there. Okay. All right. That's a good one.
I've been doing that the whole year, and I've been able to research everything I need that Trap recommends we look for.
Wow. Okay. Now
So
that's a gem. Okay.
so Davian, when you do that, you just you just close that browser, open another incognito
Yeah, you got to
browser.
close the incognito browser all the way down and then pull it
Okay.
back up just like I did and type Google Focus in there
Okay.
again.
Gotcha. Um, are you guys taking more questions? Or are we wrapping this up?
I still got time.
Okay. Really quick. So this is just I'm trying to get you guys' insight because you've been doing it for a while. So, like for example, my biggest thing is staying too long in a bad trade and then jumping out too soon of a good one. Example, the AVGO, it was up and down for 6 months. I had it in August, but then yesterday I couldn't handle those dips and I closed it. But like you said, today it shot up. So I'm like, oh man, I shouldn't have closed it. But how do you kind of know or get your feel for that kind of thing? Or is it just like because we know that for me, that contract would not have expired till March. I still had time. I was just questioning it because of all this up and down. So when you see trades like that, do you kind of know is a strong good company? So therefore, I mean, I got it. This is December. I got to March. I'm just gonna ride it out. How do you kind of gauge that kind of thing?
Well, first of all, there are some reasons why people jumped out of it, but I didn't hear you say it. So why did you jump out?
Well, for me, like you said, I had this trade even before I did this trade before, and this was my first trade before even Trap even mentioned it. So I put this trade like in September or so, and it was probably the highest I seen. Maybe October was like 30-40%. It dipped back down, so I had been negative for like since September or so. So when I saw a little positive last Friday, it was 5% up. I was so happy to see that 5%. And then yesterday, it kind of was a little bit up, but I think it went back down another 9%. So I just start second guessing. It's close to earnings. I don't know. It could go either way. It was just like all that conversation in my head. And yesterday, I think it went a little lower because I'm trying to follow these rules. If it go 10% below where I'm at, and I'm like, okay, I don't want to take this chance. I was already like really bad. Like I was like 60% at one point. I was like, nope, I'm not willing to take any more of a dip in case it goes lower. So I think that's why I just jumped out because I had been through all the motions of it for these last 4 months or so.
I got you. Now, did you lose? You sell at a loss?
Uh, I, I probably did yesterday about between 5 to 7% somewhere in there. I'm
Okay,
not well minus what my initial was, but it was a point that thing was 60% down over these last 3 4 months. So I think I
I
was
got you.
traumatized from all the up and down. Like it's
I
earnings. I don't know.
totally understand that move. But a lot of us was waiting on. They had CPI readings this morning, so you jumped
Okay.
out yesterday. So if anybody
Yeah.
was going to jump out, it was going to be today. But
Mm,
after the CPI report came out, it shot up.
Okay, so let me ask this because that's another part. Like when we talk, like I know it's certain news days, but sometimes I don't know how that news is going to affect the market. Because some news we don't worry about because it doesn't majorly affect the market. So the question is, what news are specific announcements that you're looking at to make those decisions? And then two, like you said, CPI, because it was today. What type of information tells you like, oh, I could hold and stay, or I should not? Like that. That's another part of the conversation that I'm kind of not as clear with.
Yeah, that's me just listening to CNBC.
Okay.
Plus, I like to listen to Trap on Tuesday because most of those meetings like that are after Trap on Tuesday. So I kind of get a feel for what he's gonna say. Um, but like I said, for the most part, everybody was talking about CPI was Wednesday, so it wasn't gonna affect it too bad. But at that point, everything just started going in the right direction today.
So, so what we say like a CPI news and you're close to earnings, and because in this case this was the ABGO thing, so I guess CPI was like let us get there, and that would give us a better feel of how the earnings will show out. That's kind of like the thought process around it.
And see, earnings is a whole nother play as well. A
Right, but at
lot
least
of
if I had
people,
to wait it to the CPI pass, then that probably would have gave me a little
yeah.
more information.
And see, that's what I did, and a few more did. Like Maya, that thing shot up. We got green. I had
Like
three
40,
plays.
fifty
I
percent
sold
You had
two of
like
them.
40, 50% up.
Yeah,
I,
I sold
I,
two of them,
I want
but
to,
I
I want to,
kept one for earnings.
yeah, I want to add this too. It's also it's the Christmas rally season, so
Mm,
when you're looking at the CPI report, like you got to think like, okay, this is December, it's the Christmas rally, most likely, right? Like it's probably going to be positive, right? Because of the season that we're in.
the
Um,
season, the CPI results,
yeah,
all
yeah,
those
yeah, yeah.
things, just
So
pull it
yeah,
all
yeah,
together.
yeah. The other thing too, I'll say this as far as like being down in the place, because I think we've all been there and just been hoping that plays bounce back and things like that. I think it's gonna just come down to, I think Trap said it in this last Trap and Tuesday. It just comes down to time in the seat. I think you
Mm,
just have to, everyone goes through it and you kind of have to say, okay, like, all right, like I was in this play for 5 weeks and it was down. Well, how did you feel during those 5 weeks? Like, what did you do to, to fix it? Or did you do anything? Or could you have pivoted? Or could, like, you have to kind of be in that situation, go through those emotions, and then kind of see, like, how did you feel? Like, okay, like I didn't like that feeling. Well, what could you have done to maybe cut that feeling in half? You know what I mean?
yeah,
Or
yeah.
avoid that feeling. Or, like, so I think everyone's a little bit different. I've been in in your shoes, and for me, I said, okay, like no matter how much time I have on a play, once it gets to a certain percentage, I'm just gonna cut it.
Mm-hmm.
And it
Mm-hmm.
doesn't matter. Yeah, it doesn't for me. Like for me, like that was my experience. My experience was like, okay, like I don't want to be in a play for 4 and 5 weeks hoping that it bounces back. Like I'd rather have my capital, put it in a different play, or I just want to have more options. And I felt like waiting for a play to turn around limits my options, especially if it gets down 40 to 50%, because now I don't want to cut the play because I don't want to lose that 40 or
Yeah,
50%, right?
yeah,
And
yeah.
so yeah, so it's a tough situation. And so I said, man, okay, like I don't like that situation. Some people it's okay. Like Trap, he's okay. Like he'll sit in a play that's down 50, 60% and he'll wait it out, and there's nothing wrong with that. But I think it just comes down to time in the seat.
Thank
Can
you.
I can I piggyback and ask a question on what you just said? So if you feel real good about a company, like say for instance, let's use Google, right? And it's down 50% on your portfolio. And do you roll down then? If you really believe in that company and you know that they have a good balance sheet and all that stuff, you do your homework and you say, you know what, it's 50%, it's 50, I'm down 50, but I'm gonna double down and roll back.
So that's a great question. I can tell you from experience, I've been down in NVIDIA 60%, but because I know the stock very well and I know how it moves, like, yeah, I've doubled down being down 60% and rode it back up. But that's time in the seat with that specific stock, and also kind of knowing. And now, for example, now, right, like Nvidia's cooled off. Like it's not, semis have cooled off. They're not hot. So I wouldn't, like I've cut Nvidia already because it's just, it's not that season for that. But at the beginning of this year, right,
Mhm.
I would definitely sit, and I have sat 60% down and wait and gutted it out, waited a month or
So,
a
so,
month or two and watched it ride back up and take it
so,
out for profit.
so that's the emotion that you were referring to, where it depends on your tolerance.
Yeah.
Some people can't stomach that, but
Yeah.
because of the fact that you're seasoned and you know the fundamentals of and the balance sheets of the company, that you're like, you know what, it went down. It's another discount for me. I'm gonna double down, and then you at that point you were right. So good catch.
Correct. Yeah.
Okay, thank you for that.
All right, Jakeem, what you're also speaking of is a strategy too, because everything is not meant to be rolled down. Because when you're rolling, you selling a loss at some point. Now, based off what you were just saying with her, with that last play you just did, is down 50. That would be more like if it has time on it and the leg. So
Oh, okay.
if you still got 4 months, 5 months left, and it's down, that's more like adding a leg. So
Got it.
you averaging down, because we know, I don't want to say we feel, we know the data tells us that that thing is going to bounce back up. So you're willing to catch the ride back up. So you just lowered your cost basis. Now rolling, that's if I rolled a few and lost, because when you roll the first one, let's do Uber. We had an Uber for 85 strike, and it was September was the expiration. Trap ran the play in like April. 85 strike, September expiration. We never got around to 85, and it was we was in the month of August, and the price was still around $70, and I was down bad on it. But good news was coming up about Uber, that they had some things in place that was going to make them profitable. So I rolled the play, and when I rolled it, I brought the stock price down, the strike price down, and the expiration out. So keep in mind, the original play was 85 strike, September expiration. Sold it for a loss, extended the play by moving it to January and bringing my 85 strike down to a 80 strike. And then you pay the difference, but you still losing. So now when you finish rolling the play, you kind of gambling on you're going to make that money back plus the initial money that you lost when you sold it and rolled it down. So every play is not meant to be rolled down. Sometimes they just don't work. And with the Uber, it didn't work for me.
Oh, okay. Well, I'm
That
glad that
was
you
rough.
I'm glad that you mentioned this, because I was under the impression that when you roll back, um, you keep the same expiration date. But you just explained that you
You can do
extended
either
it,
or.
or you could do either or.
Yeah.
Oh, okay.
So
Okay.
some people roll and keep the same strike and push out the expiration. Some people
Mhm.
keep the same expiration and bring the strike price closer.
Oh, okay. Okay. Good to know. All right.
But
I
like I
got
said,
a
it's a strategy when you're looking at the numbers to make all that work for it to make sense.
Can I ask a question about sniping and articles?
Yeah, go ahead.
Alrighty. So it's another guy that I watch on YouTube called Chris Sane, and he was talking about sniping. So I was trying it today, and I seen that. So Google went up crazy today, And then the other little plays that I was doing, I'd make like 50 here and 100 there, and like how you run those 10 snipe plays. But anyways, with the
Are you
Google,
are
I
you referring to scalping, or is it
y-
something different?
scalping. Yeah, I apologize. I
Oh, okay,
apologize. Yeah, yeah,
okay.
yeah. I apologize. Yeah, yeah. So yeah, I said it wrong. I apologize. So anyways, I realized. So I seen the Google articles about that microchip, and that's what made them go up so much. Is it best to like, um, I guess with plays like that, like while I'm scalping, I guess. Dang, I'm not really articulating it right, but with
I got you, man. With the scalping though, that's more like day trading,
yeah,
with shorter time frames, and you really need to know how to chart.
okay.
So with trap method is long and leap options. Give you some time to learn the game. That's just another level of how to make money with options. I'm familiar with Chris, who you talking about, and yeah, the scalping process. Because I know he ran one with SoFi. If you had at least $250, he told you to run one, grab a expiration for January 17th. He felt that the chart showed him that SoFi should hit $20 by the end of the month. But see, over here in traps, our plays are extended. We got extended expirations. Because keep in mind, when them expirations are short like that, everything got to go your way. Because your expiration is like right around the corner, and you're fighting with if y'all took the course, you're fighting with theta eating up your delta, which eats up your profits. And if you're nowhere near the strike price, that play already lost.
No,
But he
I
also
definitely
buys in
understand.
the money when he does that too, though. Those are
Definitely.
nice plays.
So no, I definitely understand. You're taking more of a risk when you're scalping and you're day trading. But I guess more of the question was like, so with things like Google, how they reached the all-time high today. If I was to want to take that risk and scalp today, would it be best to, because I pulled off too early, would it be best to read articles? I guess, is it like, if that makes sense to you, is it best to read the news reports because they came out with an all-time high? So reading the financials and stuff like that is not really based off that because they've never hit this number before? Or what
Well,
would you say
well,
is best to read the data about something that's reaching new numbers? I guess if that
Well,
makes sense to you.
so if you
fundamentals, you don't want to enter at an all-time high, and that's where it is now. People winning because they was in it beforehand. Now you're hearing the news and trying to jump in, and you're gonna lose because it's only gonna go up so much for a minute before everybody start taking profit. And you learn that when you're in the game. Everybody gets burned. I ain't gonna lie.
yep, yep. If you try to chase it today, you tomorrow. If you try to chase it today, I was taking profit this morning off of it because I was in it 3-4 months ago. When it dipped on some other bad news. So yeah, Chris, he's good at smaller accounts, scalping, making quick $100, $200, $300 here and there. Trap, he has bigger goals that he's trying to get us to, where his method is to go further out. It's going to cost more, but when we hit, we're going to hit big, and we don't have to. Depending on if you work from home, cool, you got time to look at the charts. But if you're like me or Janelle, you at work, I'm in the office, I can't do it. Right? I gotta sneak somewhere off to a break room, look at there's a play. Okay, how much money I need? Okay, I need 3,000. Okay, bet. And
Yep.
then I'm sitting back for the next 3-4 months. I don't care what happens. The other thing about that risk tolerance, when I come to find for myself, it's about being over leveraged, right? If you got a $10,000 account and you put $5,000 into a play and it goes south, you blew up half your account. Even when Trap put up 400,000 on that uh, Nvidia play, that might have been 10% of his entire portfolio, right? So once you get to a point where you're not risking no more than 5-10% of your portfolio, you can sit in the play. You may not want to sit and ride it out, but you will have more risk tolerance because it's only 3% of my portfolio. But if it's 80% of your portfolio, oh my gosh, that's going to hurt if it's going the wrong way.
Thanks for bringing up that point.
Thank you.
Appreciate that
Understood.
question.
Understood. Yeah.
And ask me how I know.
Yep. Actually, I know.
It
I
wasn't
got
until I
I
brought
got a
down
question.
that percentage that I was able to sit in place. Like, okay, it's 10%. But then I would cheat and be like, nah, okay, I'll go ahead and put an extra couple thousand in it. Now I'm at 15%. No more of that. I'm back down to 5%. No one play can be more than 5% of my portfolio. That
But you
means if
only
that
have
play
one
blows
play at
up,
a time. You want like
well,
you would do 5% for that play, but your total portfolio is 10%.
no. So my portfolio, let's say I got 50,000, right?
Yeah,
I can only do 5% of that 50 in any one given play.
any play. Okay.
Now I can have multiple play. I can have 10, 15 different plays,
Yeah.
but no one play should be over 5, 10% of your portfolio. That way that one company.
But your total account, or do you have that kind of rule for yourself? Like, out of all my plays, I'm never more than 20% or 10% out of the total number of plays.
So for me, I'm developing that, right? Because I got
Okay.
over leveraged in SMCI. My
Okay.
rule was no more than 10%. I looked around at double back down, average down, and added another leg. I'm at 20%. So I was way over leveraged in one play. They came out with some bad news. I went being from
Mm,
up 9,000. 3 weeks
mm-hmm.
later, I'm down 18,000.
Painful.
Just so happened, I was like, oh well, I'll take $10,000 loss this year, maybe $10,000 put on next year taxes. I'm just gonna have to live with it. Then a couple of weeks ago, they got a new auditor, got all my money back out of that thing. Dodged the bullet,
Wow.
dodged the heavy bullet.
Wow.
Gratitude.
Like, oh, I'm back
Mm,
to even
Gratitude.
sale.
wow.
Easy.
But I was
All right. Let
over
me
leveraged
get a heavy
trying
hustle
to
real
cheat.
quick. He had his hand up for a minute.
Okay.
Oh, my bad. It was still up. Let me put it back down. I asked
Mhm.
my question. Thank you,
Okay.
guys.
All right. Let me get mine off.
Braylon. Okay.
Yes, sir. Back to quiet witching. So, actually, yesterday I had got about a good 5 companies, and charted out what the option prices were for the premiums, and but the market was bleeding. The market was bleeding yesterday, and now today the market is up in some of those stocks that I wrote the information down on. So my question is for quiet witching, when is the time that you decide, when is the best time to get your results and records down for each company to compare it to when it's actually time for quiet witching?
You you got an answer, Anthony? I'll answer after you.
So there's no particular time frame, right? You get the quad winching at the end of one week. That following week, you're going to see prices move, right?
Mhm.
So just based on yesterday, you got a good idea of how certain those stocks that you're watching, you know how they move, right? So if
Yeah.
they went down 5% yesterday, in one day, I can be right back. Okay, go chart that option price. It was $1,000. It dipped down to 7. If I'd have bought it, I would have made me $300 today. During quad winching, if you see that same type of movement, you know that that price can get back to where it was at.
Okay.
So the simple fact that you already got a list and you've seen what can happen day by day, just on a regular red day, you have a reference point going into quad winching of what to look for. Not all
Yeah.
stocks are going to give you a discount.
Gotcha. I could have made some real money yesterday if I had actually bought into those. Because I looked at the price today and I was like, dang, it's the new premium is much more expensive than it was yesterday.
Mm-hmm.
So
Yeah,
yeah.
chart that premium, and and I think, and that's when I watched Janelle when she talked about how she do hers. You go back, you look 3 months ago where that premium was at, and we try to catch it on a nice 20% discount. But okay, Janelle, she like to, oh no, I want mine to be 50% off of its high. That way, I know I can double my money if it gets back to where it can perform at.
Gotcha.
This is a strategy question. Like you mentioned, you were in Google, and that's when you got the run up. But like, I guess after all that lawsuit conversation, I just like strayed away from Blue. Google. But I guess the question is, what gave you guys the confidence to start looking at Google, or is that just one of those stocks that you just already had to research? That's what you do all the time, so you had the confidence in it.
I had a lick on Google earlier in the year, got 100 and some odd percent on it on some bad news that came out. Stock dipped to like 130 something. And I sat in it for a couple of weeks and they came out with some AI information that took off. I was like, okay, Google can move after bad news. It doesn't move like a Tesla. So I was already in it. It had dipped a few months ago, like to 150. I was like, oh, I should get it, but it might go low. Then I was thinking it might go lower. It might go lower. Then it turned around and got to 160. I said, forget it. Let me in here at 160. But Google is a company I trust. Other
Okay,
than,
more your
but
experience with Google. That's what got
the
you,
bad
because
news
I
was,
totally like straight from it.
the people on TV was in my ear. The government coming after. I'm like, the price won't move. Everything else is going up but Google. But I got time on it. If anything, I mean, 10, 20% return is still good money. Right? If I
Yeah,
get 10,
yeah.
20, okay, maybe I didn't get my big banger, but I made some type of positive. I don't think Google is going to reverse and, go back to $100 and lose 80% value. I think it'll be steady and it should continue to grow. This week they come
So
out with some chip information, and that
yeah.
price took off in 2 days. And I'm like, okay, give me my 250%.
So
See ya.
moving forward, you still pretty good about it, just because, like you said, your experience and history with it. Because I was like, well, maybe I should be open to it, but like I said, I just strayed away from it just because lawsuit. Stay away from it, you know.
Yeah, but you also got to look at the new administration that's coming in. Them lawsuits may disappear. Yeah, I got
Okay,
time.
that's
I'm not
good.
over. I'm not over leveraged in it. Right. I did the 5% rule on it. So I was okay with riding it out. If it went south, I was okay because I'm not over leveraged. I had a decent small percentage of my account dedicated to that play.
Thank you for that insight. I appreciate it.
But also, when these stocks go on sale, you got to ask yourself, why did it go on sale yesterday? Was it a market event? Was it something to do with that industry? Are they throwing bombs overseas? All those things can affect our stock prices. If
Right,
it's not
right. Because
related
I
to
almost
bad,
started thinking it was a early quiet winter because everything kind of was dipping from Monday, Tuesday. I was like, what's going on? This is
That
strange.
that's the same way I felt too.
but
Like the VIX is still good. I'm like, but then I started like reading and looking at different things, and they kind of was saying like, because things have been so high, maybe this is just a natural pullback to where we really
it's,
might go higher starting in the new year. So I started trying to, like you said, put that picture together.
yep. So you're
But
gonna,
everybody was really taking profits.
yep. That's what I was gonna
Okay,
say.
okay.
They just profit taking,
Taking
right?
profit.
So
Okay. Yeah, like
we're
Kava.
in here,
Kava dropped like $30 a share. I bought it at 120. It was 150, and now it's 120 again.
and that was the best day to get it. It probably
Now,
won't get
when
back to
when
120
Congress
again.
dropped, they said the executives were
They were doing inside
selling.
selling.
Yeah, so
Does that
everybody
happen
jumped in.
typically towards the end of the year? Like, is this a trend that happens in December?
It just depends on the
Okay.
company.
Okay.
Now, I didn't get into Google because in my mind, Google moved, but it moved when it want to move, and I treat it as a slow mover. I got it in buy and hold, but I don't want to run the
Okay.
options on it no more.
That's good to know.
Yeah, it's kind of moving like Nvidia right now.
Or like
If Nvidia,
Microsoft. I would never do Microsoft.
yeah,
It
yep,
definitely
that one
moves
too.
slow.
Yep, Trap
Yeah,
don't run a
it's
play on that one
horrible.
either. When you understand this game, you're looking for the movers. You'll hear Trap say that in the course, movers, and now I get it. And you start looking at these little stocks that's moving $1 and $2 a day, like Eli Lilly. Everybody pissed at Eli Lilly, but man, Eli Lilly, it'll move up $40, $50. It'll
Yes,
come
it
down
will.
$40, $50 too, but it'll move. You got some options there. So I'm always looking for the runners if possible, the everyday movers. All right, you good on your question? I got a Mayshawn hand up and Braylon.
Oh,
Mayshawn?
I can put my hand down.
Okay, Mayshawn.
Yes, I got a question. If I'm when I did the course, and I'm running my plays, I did the math. and it's 5, 10, 15% out the money, but I don't see it when I'm doing the bid. I'm looking under the option chain. I don't see the price that I'm trying to get in at. And I see the open interest with everybody else going, but it be under 5%. Is that normal?
All right, so when you're running your numbers, those are just guesstimates, but your platform is law. So if you ran your 10%, your 15%, and your 20%, you start looking at your 10%, go to your options chain, see what number is close to that 10% number. It could be $1 up, $1 down. See what the open interest is. If it doesn't look good, move to the 15%. See what numbers are close to that one. Check the open interest. If they look good and they meet your price points, boom, you can enter there. If that don't look good, try the 20. But normally you can get what you want around the 10 or 15.
Okay, and that's one more question about going months out. What if the open interest is really low, like 9 months out, but it's really high, like 2 months out? Do you go with the 2 months or you go with the 9 months still?
Well, keep in mind, open interest is nothing more than the amount of contracts somebody bought at that time. So at that time, it's probably just not popular. But then again, it depends on the stock. I know a lot of people look at a few plays, depending on what company you look at, and they're like, man, the open interest ain't for 500.
Like
well,
ASML.
that type of play might only have that type of open interest. But what you're doing is, out of all those options, if this one is the best open interest, then you go with that one. I mean, it could that play just could be 500 up to 1,000. Now you get your Nvidias, and those, that they run into double digits.
Gotcha.
But that's just because that stock is popular. So it just depends. When I first started, I hit Walmart up. People were sleeping on Walmart. So open interest was never high on Walmart because it wasn't popular.
Okay, so that's something I shouldn't do. Okay, got you. Thank you.
What about that volume? Like, I pay more attention to the open interest, but should I also look at the volume as far as, like, not saying it's low, but if it had like 1 or 2 versus 15?
Volume just what's going on that day. So I mean, your open interest
Okay.
could be like 500, but at the time you looked at it, you might only see 2 volume. That's just
Yeah.
2 people looking at the play right now,
At
or
that
so
time, at that
yeah,
day. Okay. Okay.
or bought some contracts or some volume, whatever the case may be.
Okay. Because I've been leaning more on open interest, but I really didn't know where that volume fit in there.
Because you look at it on the weekend, when I do a lot of my studying, open interest is 0.
Yeah.
So yeah, don't let the volume. I'm sorry. The volume is 0 on the weekend because there's no activity. But the open interest is still good. That number is still high. But like I said, I do a lot of my studying on Sunday, so volume is always at 0.
Thank you.
Carlton? Carlton got their hand up?
Yeah, I got my hand up.
All right.
Can you hear me?
Yes.
Okay. Now, I recently joined the family and things of that nature, and I need some advice talking me off because I have made every error I wasn't supposed to. Jumped in quick, revenge traded, stayed in place too long, you name it. No.
So you working off emotion.
Something like that. Think I'm gonna hit 100,000 a week.
All right. So what play you screwed up on that that resonates with you the most?
Well, I ain't gonna say they resonate with the most, but it's just I think the time was slightly off with the 2 that I chose from Trap. It was the Carver and the GE. Carver been having a good year, but it's hit and miss. And GE had a fairly good year, but it seems like
now, did you jump in the Carver play when Trap dropped it?
No, I waited a little while.
Okay, because when he dropped it, it ran up. I'm just like you right now because I didn't sell. It ran up at least 50%, and now it's where it's
Mm,
at now. So I'm at a loss just like you. But we got enough time on it to see if it's gonna
okay.
come back. So don't sweat it too much right now.
I mean, like you said, we got the time. I'm not really
I'm
as much stressing the plays as the mental thing that got me into that situation. Like I saw that. Why did I do that? And I can't. You can't buy it high. I got to.
But yeah, I got to figure out when you jumped in there. Then that's why I asked you, did you jump in when Trap jumped in, and what was the price at the time? Because like I said, it did run for a minute,
Um, no, I did my plays like
so
just
it wasn't a
this past
bad
week.
play. It just like I said, depends on when you got in.
I mean, I think people will be out for Christmas shopping. They might eat. I think it could still, but like you said, we see all the big returns and we be like, we be happy to get 10%.
Yeah, right now, man, that's kind of the focus you want to get. I know everybody preaching 100%, and a lot of people are getting 100% right now, but they got in when you hear Trap talk about being positioned. We was in position in September, October, November to get these runs for December. So when y'all coming in on the back end, man, they already up half of them anyway. So y'all ain't really looking at 100% if you just happen to jump in. We have to be mindful of that piece as well.
Yeah. So what advice would you give me going forward other than I got to get better at charting. My charting, I've been following y'all in the WhatsApp group and trying to get better on that right there. My charting is not good.
Hey,
I got in the
charting is
cover on
another
the
charting
11th.
is another skill. Charting is another skill. I'm not good at charting. It's on my list of things to do, but the money I've made comes from Trap's formula, and I don't ran my own. So if you just dial in that, and if you took the course, just like everybody asked me about Google Focus, what other platforms Trap uh, advise
The
you to
start
use?
screener, the start
Yep,
screener.
stockcharts.com,
Yep.
Google
Stock
Focus,
analysis.
and
I'm on
barcharts.com. That's
track
what's in the course.
bar chart.
And y'all see my screen right now, right? Trap talked about RSI and moving average. That's how I got
Correct.
in and out of my plays. Like right now, I got ABGO pulled up. Can you see the screen?
I see you.
Yes,
There it is.
but just pull your screen down a little bit because the RSI is getting cut off. So if you could, there you go. Thank you.
Okay.
Can you see that?
I got you.
Uh,
So since you're not that good of a charter, you use like the RSI and other things of that nature there as telltale signs.
well, I use other methods of analysis that I've learned over time, but starting out strictly what Trap put in the course, and I made money off the plays. Charting and other forms of analysis just help you increase your chances of entering trades at a better entry.
I think that will make and break a lot of trades, that entry.
That's true. So, like you said, you're looking for the 100%. Sometimes we don't get in to where we're gonna have room on the back end to get 100%, and you just got to know where you kind of got in at. Like
Well, since
who was that? I was speaking with earlier. Was that Bree who
Yes, sir.
just sold the ABGO right before the
Yeah,
run?
yeah.
So where did you get in at? Here we at right here,
When did I get
November.
in? I
Yeah.
got in. I'm kind of driving, but I'm trying to remember. I got in because I just started this type of trading in. I started studying in August, and I did my first quad winching in September. So I did it in September, and I got it at $12.05 at that time. And it's been lower than that some days, like 7, 6.
Like, like say in the course there, they talk about RSI and things like that. Some people don't use RSI. I use it. It kind of gauges the momentum of what the stock is doing. So if you can see my screen and you just looking at AVGO up here, that was at 185. 185. You can see the RSI going up.
Okay.
Now trappers, a lot of y'all coming in after November, after Thanksgiving. A lot of people got in down here on a pullback. So we in position. But now if you join the Patreon and you hear everybody talking and then you jump in right here, because everybody talking about the wins that they got. See, that's that emotion kicking in.
FOMO.
You didn't look at the data. And this is why you got to look at stockcharts.com and all this type of stuff. You can see the movement over time. I got a 3-month chart pulled up right here. So you can see everything that it was doing. And these are moving averages right here. 200-day moving average, 153. It didn't hit that. You got the 120-day, 165. So it was fluctuating back and forth here. And like I said, once people get these numbers down, they kind of, okay, boom, it's up under the 120-day. I'm going to go ahead and do an entry. But they didn't do one way up here. They went down here. Or they might have saw it falling and jumped in right here because it fell up under the 50-day. And then it ended up falling a little more. But they didn't jump in right here. See, a lot of people coming in right here, jumping in, and then boom. And we in the chat with those stories about I'm getting cooked.
I have a question about this website. Sorry to barge in. The RSI, right? When I attempted to plug that in where Trap showed us to put it in that was that simple mover line that's further down on the page. There you go.
Yeah, RSI is down here up on the indicators.
Oh, I thought he put it where it says none, because on the video, as I I could have sworn that he put it under where it says none, and then he put in 100, I think 120 or something like that. But the whole thing is that I don't have the bar when two things. One, I don't have the bar to indicate where it goes above the 50 line on the RSI. And when I did attempt to try to put in the what I needed on the none line, it asked me to pay. Like it asked me for me to sign up for a subscription. So I see that you're in here. So my question is, did you have to pay for a subscription for this page, for that website?
No. So if you got stockcharts.com pulled up, all these is if you try to use this fourth one right here, you need
Correct.
a subscription for that fourth one.
Oh,
all three
okay.
of these will work, and you have multiple options up here. All these are strategies, different strategies.
So which one did you use to have the line for the RSI?
RSI is going to be found on the indicators. See, these are overlays.
Got it. That's
indicators.
okay.
There's multiple strategies down here as well. You can pick RSI. A lot of people use MACD. Price.
Yeah,
some people put volume.
I don't know any of those things. All I know is what Trap taught.
Exactly. So I don't want to confuse you with yeah, exactly. I don't want to confuse you with
what you just said right now was like speaking Chinese. I don't know what you're talking about, but RSI, yes, I get that. But thank you for letting me know. So I'll go back in later on today and go to that section right there and put the RSI.
So yeah, when you're on the course and Trap pulls this up, like I said, there's different deals. Now, I love stockcharts.com. This is how I do most of my work because it's just clean to me once I set everything up. And everything I got now is basically, I done taught a couple of classes in here. This is how I like to set mine up. But if you click on anything else down here, we'll just go MACD, update the chart. That's just another tool on here, right here at the bottom, that people use for helping with entry points. I don't use MACD, but some people do. I did put in RSI, and the RSI is up here. You got your 70 line, you got your halfway point, and you got your 30. So in the course, what they say about 70.
What the,
Anyway.
if you go up 70, that means that there's too many buyers. So the sweet point is to be under 50, and as soon as you start seeing it curve, then you know it's time to get in. But if you do anything above 60, 65 or 68 and 70, don't get in because there's too many buyers or something like that.
I think it was like 55 to 64, 65, the highest, somewhere in there.
All right, so that's the book answer. 70 overbought. That just means a lot of people buying it. 30 oversold. A lot of people selling. Trap likes to get in when the player's around 50, when it's starting to go up. See, like right here?
50, 55.
It hit 50 and it went up. Now, that's just y'all looking at the number. As I got hip to this game, that's all I was doing, looking at the number. 70, 50, 30. But then as I got to playing with this, see all this movement? This right here alone can kind of give you an idea when to get in and when to get out. See this movement? That's the RSI. Now, for a starter, that'll kind of help you because it helped me. It kind of helped me to get in and get out. But then I started learning some other things to additionally help me with the RSI.
So you say get in, get out. You talking about like if you need to take profit earlier to get out before your expiration?
Correct, or even enter. Because like you say, if it's 70, what do you say? It's too high. Let it come back down. And see this one right here? Over 70. And it got over 85. It was high. So you wanted that to come back down before you entered. And it came down.
So question about that. So the where you was just showing where I call it the Green Mountain. If you rode it all the way there, but it got to it looks like it got to about 75, and then you jumped out. You sold from there. Is that gambling?
No,
or
no, that ain't gambling. That's what I was saying. That's
good.
another strategy there.
That's good.
If you got in right here, if you got in right here and rode that all the way up, them some huge profits.
Okay, because I was under the impression.
Keep in mind, these are dates down here. So if somebody just happened to jump in June 1st and they rode it all the way up here, how many days is that? June 1st to June 17th. 15 days of momentum there. Now I have ran a play like that, and I probably sold right here, got back in, sold right here, got back in, and then I sold again and then get back in.
Okay, because I was under the impression that if it touches the 70 line, that's when you sell because there's too much buyers. Am I understanding that wrong?
So you can say that this as an indicator, indicator that let you know how the market is treating that stock, right? You could ride it up above 70, right? Let's say you got in at the 50 turn and you rode it up into the 70, it's almost pushing 80. At that point, because it's over in that oversold part, people are going to start taking profit.
Got it.
So you don't want to be the last person trying to hold up thinking it's going to go to 90 when everybody else is like, oh, we already passed 75. Let me go ahead and take my profit.
Okay.
Right, so you're using it as a gauge to help you understand either when to get in or when to exit. Now, if you want to ride it down for a few months, you're more than welcome to do that. But if you want to take your profit, put it in your pocket and live, like you live for the next trade, when you get to the oversold part, then you may like this chart right here. It looked like it stayed above 70 for a while. And you may miss out on part of that run, but that's okay.
This is my baby right here. This Walmart.
Oh, that's Walmart.
This Walmart. Walmart
Can you,
stayed up here.
after
But
Walmart,
I've
can you
been
tell me
tracking
Costco?
Walmart so long, I know how it moves.
So Fabian, what you think about Walmart into 2025 since we already so high? You think it's gonna keep going?
I'm gonna scale back on my aggressiveness when Walmart hits $100. Other than that, I've been
It's
aggressive the whole time
there.
back here.
You also got to
I've been in all these plays right here.
think
What
about
I
the next administration and tariffs and how that would affect Walmart moving forward, right? You got to look what can affect Walmart from going to 110. The damn tariffs can, because you got goods coming from China.
that's a
But
fact.
if
Okay.
they get in there and say, "Oh, we're friends with China, we're not going to tariff them," Walmart to 110 to 120.
Mm.
Trump ain't. I don't know about that one.
Right?
So
But you
so
gotta
so
look at what can derail your stock from moving forward, right? Not every stock
Right.
is
That
going to take
story.
off and run 300%, right? So I got
Mm-hmm.
quote unquote lucky with the Google play. I was in it. Good news came out. It shot up 200%. There's nothing else that really going to say it's about to push to 300%. So let me go ahead and take my profit now. If I miss out on another 10, 20%, that's okay. I made good money. I'll save up for, I'm waiting on the next set of discounts come quiet winching, beginning of the year. Something else is going to go on sale that I like, and I'm going to allocate that money into the next play. There's nothing wrong with taking
Nice.
profit, whether it's 1% to 100,000%. You just
so
want to
that
be able
that
to
yeah,
use these
back to
tools to your advantage. Go ahead, Will.
back to the RSI. One stock that is in an interesting spot right now would be Tesla, because Tesla's running, the RSI is high, right? And so, that's one where you know, you kind of, that could be a gamble because you don't know if it's going to keep going, because the momentum is there because of Elon Musk and the administration, but also that, man, like the RSI is pretty high right now to be jumping in. So that's one, like, right now where you could say, man, like, okay, what do you do? But I've made money off Tesla already. I've already jumped back in um, to rinse and repeat, but also understanding, like, okay, like, it's hitting all-time highs now, and the RSI is high. So there are some times where it can be kind of like a gamble, and you just kind of have to know what you're doing with time in the seat.
Like I see right now that RSI is up here at 79. And like I said, this little run right here just started. So I missed it. I'm not in it. Matter of fact, I was like back here. I messed around and got in right here, and then it went down. It went down. And as soon as it popped right here, I was green again. And I only made like $5 because I see how long I sat into this. That was a week or so. And everybody else was getting all that money, and I wasn't getting nothing. I jumped in right here. Hindsight 2020, looking at it now. I festered into all of this, and then we finally turned green. As soon as it turned green, I got out because I didn't know if it was going to drop back down again. That's that gamble, And then boom, the rewards, it's all the way up here. So I missed all of that, but I didn't lose no money, so I'm not going to be mad. I actually got my money back from all this down here because it was red the whole time. So that's the kind of stuff, you got to look at. It's going to come with experience, trial and error. But like I said, the basics, man, in Trap's course, man, that's how I got to where I'm at. And then, the other stuff that you learn with the charting and the alligator method and all that, you kind of hear people in the chat talking about that stuff. That stuff will come later, but you start trying to incorporate too many things, you're not going to get nothing done. Like Monte say, master something first so you can see if it works. What I was doing was working. I knew I was making money. Now I want to increase my profit margin, so I use these other techniques. But I was making money. Trap's method does allow you to make money. when you learn it, and just at least do that. So don't trip on the noise if you actually doing trap stuff and it's making you money until you master that. Then you be like, man, I need more money now. What can I do to change the level of the game? And then
Can
that's when you come in with other stuff.
can I ask a question? I mean, all of this is beautiful. I mean, I never thought that I would ever jump in and learn about options, because of the fear of the unknown. Um, but with all this information out now, do you feel that, quote unquote, whoever they are, will change the game, and all this information and using this chart and stuff like that will be thrown out the window?
They're not going to change the game
Nope.
because they're making money off it also. But they do understand, if you watch the movie Dumb Money, they do understand that there are new investors like us who may
Mhm.
not be as experienced, and they're looking to take your money. They're
Okay.
not trying to train you. They just want you to put your money in the market, and they're going to get that money because they know how to invest and they know how to manipulate the system to get
Got
the
it.
money.
Like Trap say, the market don't care what color you are, right? It's
Mhm.
all about green. You don't know who's on the other side of that keyboard pressing enter. And when you think about it, and I didn't know this, but insurance companies, that's how they make their money, is by trading. They take
Mhm.
insurance premiums and they go put it in the market, flip it, buy, sell, call options, make profit, and then deny your payout.
Yep.
Mhm.
That's how they make money. It's not by, they make it by investing it.
Options. Options.
Options.
Yep.
Oh, we're just doing it on a smaller. We just now got privy to we can do this. We got technology now to allow us to do it from our cell phones. We got a great teacher in Trap. We got a great community where we got
Mhm.
minds coming from all over the country with different perspectives, different levels, trying to teach each other. Because as we try to teach each other, that just instills what we already know that much more. So I can't tell you, I can tell, based on my experience, I joined last year, didn't do any trades, but beginning of this year, I'm like, I'm all in. Right. Got into this chat. It's like, oh my God, Janelle, Thavian, what I've been fighting this game with one hand tied behind my back. Like Thavian said, I was making money.
Mhm.
But now I look at some of the things that these people in this chat is doing. I'm like, oh my gosh, it's a whole lot easier now. So
Mhm.
now I'm looking at the charts. I'm looking at the 50 intro, extra, when to enter. My biggest problem was when to take money, when to take profit. Because I'm thinking
Yeah, that take profit side. Yeah.
every play I'm in is going up 1,000%. And I get up 30, 40, 50%. It turned negative, and then I'm sitting in it for months. And my little win I had is now 50, 60% loss. And now, like David said, I don't want to take the loss. So now I want to sit in it, hoping I get back to even.
Mhm.
And that's the part I got to get better at. Like, nope, 30% win is better than a 40% loss any day.
And
I
you
hear
saying
that.
use that RSI to help with like identifying maybe that target point, or like if you think you want to get out, maybe check that before you make a
Mhm.
decision to get out.
But you also got to know that company in that industry that you're in, right? Just because it hit that 70, it may be that time of the year where that industry is on the tear. And you may want
Right,
to ride
right.
it to 80%. But
Gotcha.
it may be like semis are getting a butt kicked right now. Hey, 30% win, let's get out of here. Next administration, they may go oil, gas, pipeline. So I got a whole list of stocks I'm trying to go through as far as industrials, pipelines, minerals, and stuff like that. That's going to be based in the United States. Trying to find the best ones to add to either buy and hold, and if there's some movers in there, maybe find an option or two in there.
So with your option trades and stuff, you basically stick with what you know, good companies, and you just wash, rinse, and repeat. You don't
You don't,
deviate or go
you
ahead.
don't, you don't got to go invent the next Nvidia, right? If Nvidia
Mhm.
is running, you just keep playing Nvidia. You can play the same companies over and over. Wait for them to pull back, like they didn't say. He was in Walmart. He hit him 1, 2, 3, pull back. 1, 2, 3, pull back. One, and he can make a killing doing that. Without, I went all year and only did 2 Nvidia plays.
Hmm.
Double my portfolio. Only did 2 Nvidia plays, and both of them were losers. I made my money off Google and Meta this year.
Got it.
And then I got some other little small ones I've been trying to learn to fish by myself because the Google plays was plays I seen. It's like, oh, they had bad news. It's on discount. I know they should go back up. Let me go ahead and get in this trade.
And we're only supposed to have about 10 or 12 what is that, 10 or 12 watch lists
Yeah.
company in the watch
Your,
list
your watch list is what you can handle,
manage.
right?
Okay.
That you can manage. It's hard to watch 50 companies because you never,
Because
it's just too many.
what
Right?
I'm sorry to cut you off, because what I'm
Mhm.
getting is that, say for instance, there are different sectors in the market. You have oil, you have electric, you have transport, you have goods like Walmart.
Mhm.
So say for instance, if I had two of them, like Walmart and Costco, right? And then
Your account.
I have Microsoft and Apple, and then
Mhm.
I will have um, for transportation. Like I said, I'm in transportation. I'll have Tesla and Uber. So on and so on. So with that 10, I will have two of each sectors, if that makes sense. Okay, I'll have two companies within I like or believe in for each sector. So when there's a rotation, I can just jump back in with the company that I like. Does
Mhm.
that make sense?
That that makes sense.
That's how to do it?
That's what you want to do, right? And while you're studying those two, right, in your industry, you're gonna do around, look over one day, driving next to another truck, and be like, "Oh, who's that? Oh,
Mhm.
let me look them up." And now you're gonna have another one on your watch list.
So the 10 it doesn't include the ETF, the QQQ, and the what's the other one? QQQ and XL.
So
No,
the like,
X
so like
XLK.
the
Uh-huh.
ETFs are they're industry specific. Most ETFs, right? So like
Technology.
The SMH play is based on semiconductors. So as the semiconductor, NVIDIA, AMD go, so goes the SMH play.
So
So
run them together if it makes sense to put an
you
option
would
on them.
you wouldn't want to run NVIDIA, AMD, and SMH because they're all tied together. They're gonna move the same.
Oh,
Because if in this particular part of the year, now they're all getting beat. Now your portfolio will look like shit because you're too leveraged in one industry. Right.
okay. So you can be over ledge, and because
So,
I was looking
right.
at Costco, because that's the company, that's the place that I use to shop, right? I was looking at the chart. I was like, wow, Costco is just running.
It's
So
beast.
right. So what I realized is that I was looking at the holidays. So of course, Christmas, Thanksgiving, um, Memorial, July 4th. When I looked at the chart, I was like, of course that it will go up because that's the time that, and also Easter, that's the time that people mostly not like really buy more food because of celebrating, cooking, families coming over, whatever the case is. I was like, okay, that looks like a good thing. So running Costco and Walmart together, is that
Yeah.
a
Now you're
I-
betting on the two big dogs in that industry.
right? But you said
You're,
that
you're not
there's
you're
some.
not you're not betting on Kroger
Mhm.
when you got Costco and Walmart sitting there. Why go try to make a play or buy Kroger when you got Walmart and Costco
Oh, okay, but you said that over leveraging or doing too much on in a
in,
sector that
in the
wasn't good.
industry? Right.
In- right.
It can burn you. You can run up big if that industry is hot, but on the
Mhm.
flip side, if the market pivots and go away from it, then you're over leveraged in the industry that's the market that is no longer rewarding.
Oh, I see. So you can run
So
both, but the cycle, if that cycle is
the cycle
gone,
can
then you
change.
got
So
okay.
if
Got it.
So
Okay.
yeah,
Thank-
you can run both, but make sure that you're not your portfolio overall isn't just leveraging those two. So if you have Walmart and Costco, then make sure you also have like Nvidia and Tesla. So now your portfolio is more diversified, if that makes sense.
Okay. Okay.
Have you ran a play before, man?
Me, Jakeem?
Yeah. Yeah.
Oh, okay. I didn't know who you was talking about. Yeah, I did. I ran GE.
Because when you
I,
said Costco, you know, if you really pull them premiums up, they're expensive. I ain't counting your pocket, but
yeah, I know. I looked at all of those the ones that Trap put out, and GE was in my
price range.
price range. I was going to get greedy. I was going to get greedy and buy two contracts, but Trap said, "Don't do that. Just buy one." And I was like, "But I got them in my head. I'm like, I got the money though. I could buy two or three, four right now." But I was like, you know what? Let me go through the process. Let me follow his teaching, and I just bought one. And with GE, GE was 825. I waited, and I got it at 690. But then I was like, oh my goodness, it just went down today at 558, I believe, or at 585. And I was like, my goodness, I should have waited until today. So I'm in that emotion of shoulda, coulda, woulda, and stuff like that. But I'm like, you know what? I did my research, did my homework, saw that, that they're going to have a couple of new contracts coming up. GE is a good company, and I just left it as that.
I got you. I got about 20 more minutes, man. Let me get a few more questions in. Mimi, I know you had your hand up for a minute.
So I had a question about the quad winching in December from anybody who had prior experience from it. Is it similar to July or September? Is it kind of like that?
For the one in December?
Well, the one that's coming now, is it similar to what we experienced in like early July, September?
Well, the September quad winching, we had a rate cut.
Right.
See the big discounts in that last quad winching because of the rate cut. The market shot up, and we didn't really get deep discounts for the past quad winching.
Well,
So
well, because I think our quad winching was in July. So because like you know how everything was red. So is December kind of gonna be like that? Like is it like mild discounts, not really as elaborate as how July was?
we won't know until quad winching happens. So you can also pull the dates on quad winching. We talked about it earlier. You can do a Google search as far as when is quad winching. In July we just had a pullback. That wasn't even quad winching. We had ran up for 4th of July. I had a $10,000 day. I was around here with my chest poked out. 2 weeks later, I was crying.
Right.
I was like, what the hell happened to my money? It's gone.
Yeah, that was like July 31st, August 1st, the
Right.
CrowdStrike fiasco. So yeah, that was a pullback, major pullback.
That was not quad winching. That was a pullback.
Okay, because it lasted until
Right,
like the beginning of September. Right.
and then September normally we have the other quad winching, but this September we had the rate cuts that kind of boosted the market, and it kind of muted that quad winching cycle.
Okay.
So there's no such thing as a early quad witching, right?
No.
Okay.
No, quad winching is the date that it happens. What we look for is the discounts when they start to rebalance their portfolios that following week.
Okay. And Fabian, I want to tell you thank you. So I'm much better at my entry points. Like I'm very confident in it now. So and I'm good at exiting and entering. So thank you to you and Janelle on the alligator. So I really understand my charts now.
So you got the alligator down now?
Yeah.
Are you using McCullers?
I don't use the alligator on here. I use the alligator on Yahoo Finance. So that's what I use.
Oh, okay. Look at you.
Yeah.
Developing your own strategy.
Yeah.
Stick to it. That way you know if it works. Stay consistent.
Yeah. Yes. So thank you. That's my
All
question.
right. Who we got? Carlton. Still had a question, Carlton? All right. How about Trevor?
Yes, hi, good evening. This is Treva.
Treva, okay.
No worries. Hi, Fabian and rest of the trappers. I bought the course in October. I'm a buy and hold investor, but I bought the course so I can learn options. So I'm learning, watching the videos and in the chats, taking lots of notes. And Fabian, you just said, um, that you look for the stock movers in the market to do your options, and that you just said earlier you're looking for the runners, and you said some of the prices will move like $1 or $2 a day versus, I guess the price is moving double digits. And how do you determine that a particular stock you consider it's a mover or a runner? Are you using 'cause I'm trying to learn that, the stock charting, stock charting as well. So I think I'm doing a lot of stuff right now, but how are you determining what is a stock runner and what is a mover, and how are,
You see my screen right now?
yes, sir.
You see how this thing going up and down and up and down?
Yes.
This is like momentum. Like let's say this candle that I'm looking at right here.
Yes.
This is the price that is moving throughout the day.
Yes.
So these long candles kind of give you an idea that this thing moves throughout the day. Now look right here, 300, 320. See that?
Yes.
This thing moves. That's $20.
Okay. So okay. Got it. Got it.
Now you got some small ones here, but for the most part, this thing moves every day. Now you'll see it right here. Look at this. You'll have some stock that just do this. That's
Just
no movement.
consolidating. Yes.
Yeah. And there are stocks like that move just like that. Look, stayed at 222.
222.15. Yes.
So if you just
Okay.
got a stock in your mind that you want to check out, throw it in here, and then look 6 months out. Look at the movement. That'll tell you alone right there if it's a move or not. Keep in mind, from here to here is like $20.
Mm-hmm.
Some of them stretch longer than that.
Okay. And you said this is stockcharts.com, correct?
Stockcharts.com.
Thank you. Stock charts. And you're also viewing, David, you're also viewing to be sure the stock price is moving above your moving averages. You got 50, 120, 200. Okay. Okay. And you said the
So just the
RSI.
move.
Okay.
Yeah, the moving averages. If you don't know nothing else, you can use your moving averages to identify entry points. Now, in this case right here, if you didn't know anything about charting, this is Tesla, and you came in on the back end. Right now, this thing is too high. So this is how I learned. I hear everybody talking about a stock. I look at it, it's way up here. So in my mind, I'm gonna write down on my little notebook, I'm waiting for this thing to come down to 292 at least, 320 to 292. Up here is just too high for me to enter. I'm gonna get. So then I'll monitor it. It might come down to 340. The moving averages might change slightly a bit, but just looking at this right now, I definitely wouldn't get in, even though it's running, because it's running off momentum and sentiment right now versus fundamentals. And fundamentals tell you this is too high. You need to come back down before you enter.
Okay. Got it. Thank you very much.
Mm-hmm. Carlton? All right.
Yes, sir. I am here.
What you got
Hello?
going?
Well, after I didn't mean to raise my hand, but now that I'm here,
Oh, okay.
I was looking at your
Yeah,
settings. Oh, you're good. I'm looking at the settings. So you use I heard you say you don't use the alligator. You use the 50, the 70, the one. Let's say the 120.
No, I use all of them, but in the course, Traps gives you this as bare minimum. the moving averages. Now I use alligator, I use Bollinger Bands, I use all those. But in the course, Trap at least tell you to do your moving averages. So you come down here
I
and
think
set
I'm gonna
them up.
follow you.
So you come down here and set them up
Yeah.
simple, 50 day, simple, 120, simple average, 200. And whatever colors you want to use. But those are what Trapper tell you to put in. And then your RSI. I don't
Okay, I
use
think I'm gonna
MACD, so
follow
I
what
turn
you
that off.
said. I'm gonna do like you said and just focus on one thing before I try all this other stuff.
Yeah. So I don't use MACD, so I turn that off. That way you keep the screen clean, man. So you're
Okay,
moving
so just move
averages,
averages at
RSI.
RSI.
Yep.
Gotcha.
You start there and learn that one and master it. Then you can move to some other things as you get familiar
10-4.
with reading it.
Okay, I get right on it.
What you
Thanks
got,
again.
Pete? Appreciate you, man. What you got, V? OGV?
Hey, David, what's going on? Thank you for taking my question, man.
What's going on?
Hey, so I'm looking at the chart right now, which you have stock charts, I have mine up as well. So I asked this question before, I just need to get confirmation. For the time period, for when looking at the RSI for entry, are we looking at the daily or the weekly? Are we looking at both and just trying to make a determination from what they're doing?
All right, now for me, I use the daily. And all the daily
Okay,
is telling you what this candle is doing from the day.
okay,
Now, if you change this to hourly, weekly, we'll go
mhm,
weekly.
okay,
It's going to show you what the candle has done in a week. See that?
okay. Yes, sir.
250 all the way up to 320. And this goes back to trivia. This is a
Okay,
mover. In a week, that thing was moving.
right.
Moving. But like I
Thank.
said, I keep mine on daily.
Okay. All right. Yeah, that was my question. And one last thing, I've been wanting to ask this question several times, but I always forget. So in the course, Strap says that you want that strike price to be above the third level of resistance. So personally, I haven't been doing that. I want to stay closer to the money for myself, right? So I understand lately with these runs, like it could just run like Google. I see that. So what's the purpose when you're in that type of environment of being above that third point of resistance?
Now, when you say you wasn't doing that, do you actually know what the third level of resistance is and ignoring the
Yes,
number?
yes. So I was doing that, particularly when I would do that and I go further out, because I really focus on the momentum and the delta, right? I focus on those two, and it's been pretty successful. But I just want to know why he stated that to be above the third point of resistance. Because sometimes when I do that, like it'll take a little longer to, capitalize off of.
Most of your plays you probably picked were above the third level of resistance, above the third level of resistance.
Right, right.
In his mind, he treated like this right here.
Mm-hmm.
You see my screen?
Yes, sir.
See, above the 50, Trap wants the thing to start moving upward a little bit above the 50.
Okay.
So he's saying in the course, he says above the third level of resistance.
Okay.
That's when he knows it's going to run.
Okay. All right. That makes sense. Thanks
You
for that
hear everybody
clarification.
talking about it bounced off and it went
Right.
back down, and it bounced off and went back down. So he's saying when it breaks the third level of resistance, you should be getting a runner.
Okay.
Or it
That
should be
makes
getting ready
sense.
to run soon. So that's why he say pick that one.
All right. Cool. Appreciate it. Thank you so much.
Yep. Sean B.
What's going on, Fabian? What's the deal?
What up, man? Is that the
Oh
LA
man,
Trapper?
LA Trapper in the building, man. I love just coming in here soaking up all this game, man. I just want to shout out all the new trappers, man. Welcome the new trappers to the family. It's a lot of great, amazing questions being asked, and Davian always do his thing. So shouts out to you for doing this, man. I just want to like I say, welcome everybody and just say, man, like don't underestimate the power of this game, man. I've been doing this stock thing for some years now, and what Trap doing is amazing. But the marketing looks amazing. You know what I'm saying? Don't get it twisted. The marketing looks amazing, but work goes into this game. A lot of work goes into this game, and anybody that's been following Trap, he in love with this game. And it's almost like once you see what it can do for you and how it literally can change, just the entire trajectory of your life, you know what I'm saying? You got to know that this don't come easy. You know what I'm saying? So that's why I say shout out to everybody that's asking these questions, getting these questions answer, because you got to put the work in, man. Ain't no shortcuts in this game. You know what I'm saying? Like I think they even said, when you see people talking about all the wins that they came up on, you know what I'm saying? I think I sold one of my Google contracts today for like 160 percent, but a month ago, you know what I'm saying, I was down probably 50-60% in Google, you know what I'm saying? And everybody was talking trash. Oh, Google is not a mover. You gonna lose. You shouldn't be in this. You shouldn't be in that. And a lot of people were panic selling. You know what I'm saying? So like Trap say, you can't tell you how to feel once you losing money. So a lot of this, man, is the research. You got to do research. You got to respect the data. Get in these charts, actually study this game. If you think you just gonna get in this game, put some money up because you got it, and you think you're gonna double it, triple it, trust me, you're gonna get hurt and you're gonna lose, and you're gonna lose bad. Understand that, this game, if you want to win, if you really want to win and keep winning, be prepared to put that work in. You know what I'm saying? We buy on red days. That's one of Trap biggest things, buying on a discount. So it's crazy to me when people see stock running. It's like, oh, I'm gonna jump in this. Is it too late to jump in? Why would you be jumping in it if it's running? That's one of the biggest things that don't want to do. We want to buy on red days. So, just study these stocks, and focus on the ones that you really like, the companies that you really like, know what they about, know what they, know what you're investing in. Don't just get in something because everybody talking about it. Know what makes the stock go up. You know what I'm saying? What's gonna make the stock bubble and all of that, So just put the work in, man. Put the work in. If you really want to get paid, you really want to make money, put the work in, and develop your own strategies. Know why you act, know why you enter in a trade, know, the percentage that you looking for, and all of that good stuff. You know what I'm saying? So shout out to everybody that's here. Welcome to the Trapper family, and let's get it.
Appreciate
Appreciate it.
that, bro.
Thank you.
I just want to end with this note, man. I see quite a few people on here. I don't know if they knew and didn't want to say anything. But one of my tips, man, is a lot of people come in and they're intimidated by the price of some of these plays. So I don't know if you ran a play or looked at a play, but some of the plays can be expensive that Trap drop. Don't let that discourage you. Continue to do the course, learn how to fish, and fund your accounts. The key is getting that money up. And when you get into some of these plays, if you ran some plays, always know what you want to spend first. That kind of determines how I pick my strike prices. Like I said, I came into this game, I had that $1,000 mentality. I'm good to spend $1,000 to $1,500 on a contract. And if the plays wasn't there, then that wasn't my play. But if I can go fishing inside the platform, if everybody's familiar with what I'm talking about, you're on your platform and you're looking for those strikes, the open interest, and you find the one 6 months, 7 months, or maybe even 4 months that meets my criteria of I'm willing to pay $1,000 to $1,500 for one contract, then I execute. Just know your numbers going in. Some of these plays, man, they $6,000, $7,000 for one contract. And if you're not there yet, it's okay. Now, the first play I ran on my own, I had a little bread going in. So when Trap was dropping those plays, I was dropping those $1,000, $1,500 plays. But the first play I ran on my own was Walmart. Walmart had just split. It was like $50. So I went through those motions of buy two contracts because I could afford them. They was only $200-$300. Bought two contracts, watch it do what it do, hit the 100%, sold one, let the other one run, and I got familiar with that process. So that's one of my tips, man. Just make sure you're continuously funding your account and then know what you want to spend. And then when you're shopping on the platform, purchasing those contracts that meet your numbers without going overboard. Anybody got any other questions for me?
Yeah, I do.
What you got?
Talking about platforms, is there one better than the other? For now, I'm using Robinhood, and what I've noticed with Robinhood is that even before the option, if I would purchase something, for example, it says it's $10, it will charge me extra. It wouldn't do it for 10. It will do it for $10 and I don't know, $10.75 instead of it being rounded just to 10 as I press buy.
All right, so Trap just did a Trapping Tuesday on what you're talking about. And he said Robinhood, the spreads are far-fetched because that's how they make their money. So what you doing is you paying for the spread. So that's when you go market price versus bid price. If you choose to pay market price, then that's how they're getting that additional money. But if you sit in it and be patient and put a bid price in, a limit price, have you seen that? The term is limit, actually. Limit and market. So if you're on Robinhood and you select market, then you're going to pay that high premium. But if you put in limit, it allows you to put in the numbers that you want to put in and you feel comfortable paying, and you wait for the price to come down to that particular price. But as far as what's the best companies, it just depends on preference. I tell everybody, man, Charles Schwab and E-Trade is grown folks accounts. Webull and Robinhood and all that, that's to get the younger investors to get started, but you don't want to stay there long term. These other accounts, Charles Schwab, E-Trade, they grow with you.
Oh,
They got other programs in there, other IRAs and all type of stuff. Checking account.
Now,
You're doing everything in one house.
okay. So with again, I was a little bit unsure about how to do this thing because I'm in the Robinhood account right now. So the limit order thing, right? There's let me see. There is okay, you can do limit. That's where you put the price that you want to bid, that you want to ask the price for, right? And then all the way in the bottom it says good for a day or good till canceled. I didn't know which one to put. So I mean I did choose, but I put good till cancel, and I wanted to know, is that a good thing or a bad thing, or explain that to me. What's the difference?
I put
Mhm.
good to cancel.
I couldn't hear you. What?
Go ahead, Fabian.
I said I put good to cancel because a lot of my plays, when I'm comfortable with the numbers that I'm choosing, I'll go ahead and put in the limit that I want to pay. Sometimes it might take 3-4 days for it to hit, but I'm anticipating that price coming down. So the premium could be $15. I'll put a limit order in for 12.
Got it.
And I'll put it limit for 12, and then you could choose for that day, and then at the end of the day it cancels out. But if you put until cancel, it can sit in there for a certain amount of days, and I think it's normally like 3-4 months.
90 days. Yeah. 90 days. Okay.
So, and then it'll just sit there until that price drops, and then it'll hit. Especially for busy people, you know what I'm saying? Like Charles was saying, you're working, can't get to the phone, but you know that's the number that you want. You can go ahead and set that limit. You don't study the market. You feel it's coming down, and that way when that thing hit, and your money's in there, because it ain't gonna let you set it up without the money being in there.
Right.
So some limits I can't set up because I'm waiting to sell another play to get the money. But if I got the money sitting in there, I can go ahead and set the limit up because this is the next play that I want.
Got it. Okay. Sounds good. Thank you for that. I don't want to ask two questions without without asking if anyone else has another question, because I have another one here.
Oh, Mayshawn, do I be messing it up?
Yeah, it's my shine, but
Mayshawn, okay.
I'm asking for that, is that for buying whole or is that for long term?
That process I just talked about?
Yeah, the process.
I mean, you can do that on buy and hold and option plays, but those options come up when they ask you that.
Okay, I was just making sure because
Yeah,
I
on
see
buy
on
and
buy and
hold, there's a
hold.
limit also. Yeah, on buy and hold, there's a limit option also. So you
So
can put a limit on it.
do Robinhood charge us when we doing buy and hold?
I don't know what Robinhood fees are. Like with Charles Schwab, man, every trade I do costs 66 cents.
Okay.
And it's tacked on the back of the play.
Okay. So I need to go do research.
Yeah, you got to see what their fees are.
Okay. Thank you. That's all I have.
Trivia?
Yes.
Oh, you had your hand up? You had another question?
Oh, I'm sorry. No, I don't have. I'm sorry. No, I'll take it off. Sorry.
All right, Jakeem?
All right. Now, Trap was talking about every year in January, he purchases, I believe, if I'm not mistaken, 10 stocks, and he holds it for a year and sells it, wash, rinse, and repeat every year.
Okay, that's called the recession portfolio. That's what he does on Trapping Tuesday.
Uh-huh.
So the stocks in the buy and hold on the recession portfolio, you go to any Trapping Tuesday video, you will see that session. And the month of January, maybe February, he's identified and jumped into some stocks and hold them for the year.
Just for a year, and sells
Yeah,
it.
because he's just trying to prove to everybody that he can beat the market. He's letting all other investors know that he can pick the right stocks, enter at the right price, and get a return at the end of the year. That's his game. Now,
but
us as trappers, we can play the same game with him if you got the money. That's why he does tell us that in the Patreon. I just put such and such in the recession portfolio. If y'all want to get in. You know, he might buy 15, 20. If you only got the money for, 2 or 3, get the stock. But if you want your portfolio to match his, that's what he's doing.
And it doesn't matter the price. He just jumps on it for in January.
Well, I ain't gonna say it don't matter the price, because he's picking the ones that he can get in at a good price, and he sees growth on the back end. He ain't just jumping into anything.
No, what I mean is that, say for instance, I'll use Tesla for example. January starts, it's at 500, and then he buys it right there and then for 500.
Yeah, if there's a buying opportunity.
Or is he waiting for a pullback in January to buy it at 475 instead? That's what I mean. Like,
well, you can say that.
I think it depends, right? So every year he, like Fabian said, it's just to show the public he's picking great companies that's going to outperform the S&P. So at the beginning of the year, he may only pick 3 or 4 companies, right? Just to get the portfolio started. And then maybe a month later, he may add 2 more, whether that was him waiting for a discount or to figure out which, other stocks he want to add to it. He really doesn't say as far as that, but he's trying to pick quality companies that he sees for the next 12 months should beat the market. So what you won't see him do is buy a stock in January, in June, sell it, buy something else in September to, play catch up. Whatever he picks in the beginning of the year, so far he's been rocking with it all year.
And it's usually about 10, or
no
is it
more than 10? No more than 10 or 12. 7, somewhere between 7 to 12 that's going to be in that
So-
portfolio. Now,
so-
I want to say the previous year he had extra cash, so a few months in he added a couple more stocks because he had the cash on the side. This year, I think he came out the gate and just loaded that portfolio up almost to the top, and then added maybe Allstate or something later.
Got it. And he also mentioned about having different brokerage. Don't have your dividend dividends stocks in the same one with long buy
No,
and hold.
it's a portfolio, right? So within your brokerage, you can open up as many portfolios as you want. I probably got 6 or 7 different ones. So
Oh,
if you want to have a dividend portfolio, he suggests putting dividend stocks in that portfolio. If you want to
got
do a
it.
buy and hold long term, he suggests separating that from a dividend perspective. And if you want to do options, he suggests putting that in a different portfolio. Me
Okay, because I
myself,
was
my money is I got buy and hold, short term, long term, options all in the same one. But then on the
because I
backside, I'm funding my other portfolios.
okay,
Go
because I
ahead.
was under the impression that he meant okay, have your dividends in Schwab, have your long term in Fidelity, have
No, no,
your
no. He's talking about
that's what I
portfolios. Portfolios
oh,
only.
oh okay, okay. I
Yeah.
okay. All right. Thank you for answering
And
that
see,
question.
that's the beauty of Charles Schwab and E-Trade. So you like say you can open. They call accounts when you open them up, but like Anthony saying, you treat them as portfolios. So each account is a portfolio. So you can open as many accounts as you want to. I started off with a REIT portfolio, then a stock portfolio, and then I graduated to these options. So I got 3 accounts.
And
Oh,
also
okay.
for anybody else on here,
Which
if
is
you
3
have,
portfolios.
I would suggest anybody who has kids and as you growing in this game, go ahead, get their custodial account started. That way they have 20, 30, 40 years of growth. Whereas here I am, my 50s trying to get my way to retirement. I got my granddaughter a custodial account, got my daughter, she's 18 now, but I just started theirs a couple years ago. But what if I would have had this knowledge 18 years ago? Where would my daughter be?
All right.
So if you
So
got
with that,
kids, nephews, you can open up custodial accounts and you can fund it and run it in your account. Go ahead.
and what about? I'm not saying. Well, I don't have any grandkid. I don't have any grandchildren yet. But for example, hypothetically, if someone's child doesn't want to give you your grandchild's social,
You need a social to open the account. That's all you need.
right? If they don't want to give it to you, then you can't do it. Okay, all right.
Can't do it. Now you can start another portfolio, name it whatever you want, and just fund that account and give it to them later. I mean, you can still open up some other kind of account and save for them and trade for them, right? But the
Mhm.
custodial account is built for you to put money into the account, let it grow over time, and when they become a certain age, that account becomes theirs.
Okay. And thus far, that's my last question. Appreciate you guys for taking your time and answering all of my questions. Hope it wasn't any dumb questions or anything like that, but I just needed to know. So I very much appreciate it. And everyone else that's on the on the Zoom that allowed me to ask all these questions. I hope my questions were also able to help you guys too. And I very much appreciate it. Thank you.
Good job. Thank you.
Yeah, good looking out. Appreciate it, David and O. Good looking out.
I appreciate
Thank you,
y'all, man.
Fabian. Thank you.
Thank you all
All
for
right,
everything. Thank you.
all
Thanks,
right.
David.
Tomorrow's Thursday. The chat gonna be hot. Get ready.
Right.
The block is hot.
Have a
Like
blessed
that.
one, family.
All right. Thank you. Bye.
What time is
All right.
what time is Sunday's uh chat? What time is Sundays?
All right, let me clear that up. That's nothing guaranteed or official. That's kind of like what I'm doing now. So you're probably talking about a call from Monte. Monte
Yeah.
may or may not put a call in. He's our charting guy.
Oh, okay.
So he kind of put them together like I do. So you just never know. But keep your eye on the chat. He might throw a link in and say, "Hey, who wants to know this today, or who wants to know that?"
Oh, okay. All right. Understood.
You definitely helped out a lot, man. Have a blessed night.
I appreciate y'all. I'm out.
Hey,
Thank you.
Yo, go ahead. Go ahead. Who
hey,
next?
was this recorded and can we find it somewhere?
Yeah, I got it recorded, man. I can throw it in the chat in the morning.
Okay, thank you.
Appreciate it.
All right. Thank you for that. Good night.
All right.
Good night, everyone. Bye bye.